Hi everyone, it's InvestiChan. Welcome back! Today we are taking a deep dive into an absolutely incredible second quarter of 2026. The market has been very supportive and our growth strategy is finally paying off. Get comfortable, let's break it all down! Before we look at the numbers, here is a quick reminder of my investment philosophy. My strategy is built on three simple pillars. First, I invest in strong, proven companies that are leaders in their markets and consistently pay dividends. Second, no speculation here. My goal is not to beat the market at all costs, but to generate a reliable passive income to achieve financial freedom. Finally, I stay highly diversified between the US and Europe, balancing high-yield stocks with those offering steady growth. To achieve this, I structure my portfolio around key sectors. We have industrials, technology, energy, luxury, financials, consumer defensive, and health. This is what I call my Trinity investing approach. It is something I truly love developing and refining, and I will dedicate an entire future video to explaining the philosophy behind it. Let's look at the current breakdown. In total, our portfolio hit a value of $19,000 this quarter. Industrials and tech remain our two biggest pillars, representing 21.6% and 19.6% of the total, respectively. Energy and luxury follow closely. This allocation allows me to capture growth while limiting the downside if one sector stalls. Moving on my favorite part, dividends. Currently, my global yield is at 2.47%. We have already received over $354 this year, which brings us to 40% of my monthly goal of $100. Now, I know $40 a month might not seem like a huge amount for now, but as a perfect example, it already covers all my monthly subscriptions. And the best part? I get this just by sleeping. I don't have to sell anything or do any extra work. Little by little, the nest egg grows, and the money works for me. And looking into the future, it gets even better. It's important to note that these projections are based on my current holdings without any dividends being reinvested for now. Even without the power of reinvestment, with a dividend growth of over 9% per year over the last 5 years, the projections show that our passive income will explode by 2035 thanks to the magic of compounding. Let's jump into the details with the industrial sector, the true engine of the economy, accounting for 22% of the portfolio. My selection is simple. I hold Air Liquids for its absolute dominance in gases and essential industrial processes. Airbus, an aerospace titan that dominates its duopoly with an incredible backlog. And Vinci, the king of infrastructure and concessions. I didn't pick these by accident. These are fortress stocks. They provide the tangible, physical backbone of our society, ensuring rock-solid revenue stability that I can count on for decades. On the technology side, we are at 20%. This isn't just buying tech, it is about capturing the future. I've selected Alphabet for its data modes, ASML because they literally own the lithography machines required to build every advanced chip on Earth, and Microsoft for its mastery of both enterprise software and AI infrastructure. These aren't just high-growth disruptors, they are scalable innovation machines with massive economic moats that are shaping the next century. I hold these with high conviction because they capture the long-term momentum of the entire digital economy. For energy, representing 50%, I trust Total Energies, ENGIE and Enbridge. I chose these specific players because they are my best weapon against inflation. They are masters of energy, infrastructure and transition. They don't just provide commodities, they command the networks and extraction capabilities that keep the world running. Their ability to generate massive, cyclical cash flow through all market environments makes them an essential, non-negotiable part of my portfolio's defense. Now, for luxury, sitting at 14% of the portfolio. This is my quality and prestige play with L'Oreal, Ferrari and Richemont. Why these three? Because they possess something no other sector has: incredible pricing power. When you own the world's most desirable goods, from the best cosmetics to the most exclusive supercars and high-end jewelry, you don't compete on price, you dictate it. This exclusive value creation is backed by unwavering global demand, making these brands virtually recession-proof in my eyes. In the financial sector, at 12% we have Visa, MSCI and AXA. This is the core engine for capital growth. Visa is a global payment rail that takes a toll on almost every transaction. MSCI is the indispensable data provider for the entire institutional world, and AXA provides the reliable scale of insurance. I chose these because they form a symbiotic ecosystem. They are plumbing of the global financial market, consistently enhancing our overall portfolio yield through sheer operational dominance. For consumer defensive, which makes up 11%, I bet on the daily non-negotiables: Procter & Gamble, PepsiCo and Danone. I hold these with total conviction because they offer unparalleled resilience. People might cut back on luxury goods or travel, but they will never stop buying soap, snacks or dairy. These companies aren't designed for explosive daily moves. They are built for consistent, compounding cash returns that stay stable regardless of what the broader market is doing. Finally, health represents 7% with Zoetis, Johnson & Johnson and AbbVie. I have carefully selected these because they combine scientific leadership with deep-mode product pipelines. Zoetis dominates the animal health space, while J&J and AbbVie are powerhouses in human medicine. I'm betting on these because the trend is undeniable. Healthcare is a secular necessity that grows with the population. These are high defensive values that protect the portfolio while driving life-changing innovation. What's the plan for the rest of the year? My primary goal is to bring each holding to at least $1,000 by the end of 2026. I will also gradually increase my healthcare exposure to reach 15%. And, of course, I remain on the lookout for any market pullbacks to buy my favorite stocks at a discount. Obviously, a quick mandatory disclaimer. Everything I share here reflects my personal strategy. This is not financial advice. Please always take the time to do your own research before investing your money. Thank you so much for watching! If you enjoyed this video, don't forget to hit that like button, subscribe so you don't miss future analysis, and let me know in the comments which company should I analyze next week. Take care of your finances and see you soon!